In terms of my background, I was the founding CEO and chairman of the original Osisko Mining back in 2003 with my co-founders, John Brzezinski and Robert Wares. In terms of our background, we developed the Canadian Malartic project, which is now Canada's largest gold mine and one of the top assets within the Agnico Foundation, producing around 700,000 ounces a year and working towards 1 million ounces a year. We sold that company in 2014 for $4.1 billion. And we started the Osisko Gold Royalties, for which I was the founding CEO and chairman as well. That company has gone on to be Osisko Gold Royalties, now a $5 billion market cap, and the fourth largest royalty company in the precious metal space worldwide. Within that group, we also founded several spin-out companies, including Osisko Mining 2, which got sold to Gold Fields for $2 billion last year, and several other spin-outs. The one we're going to talk about today is my focus, Osisko Development Corporation, ODV, of which I'm the CEO and chairman and the founder. What we're working on is our usual Osisko formula, which is advanced brownfield projects in tier 1 jurisdictions. We're focused in Canada, the US, and we do have an exploration development asset in Mexico as well. The one we're going to talk about the most today is the advanced, fully permitted Caribou Gold Project located in central British Columbia. We received the permits on that in November of 2024, so very exciting project. The project being granted in 4 years and 10 months. So the most recently permitted gold project of significance in North America. And we're working towards an updated feasibility and project financing as we speak. In 2024, we also raised $92 million through the issuance of equity. So we're very well financed, having finished the year at over $100 million Canadian. We also secured a $50 million credit facility last year, and we completed phase 1 of our regional work for the Trixie project and provided an updated MRE on that project in Utah as well. So a lot of big milestones. 2024 was very busy, but not nearly as busy as 2025. And this should really be the breakout year for shareholders to see significant valuation driven out of Caribou and eventually out of Trixie in Utah as well. So the catalyst, as we showed there this year, will be that updated feasibility study, as well as the advancement of the Tintic project, and the porphyry drilling could be very exciting if we're successful there. Thanks. Next slide. We're located in central British Columbia, in a historic mining district. This was discovered in 1860. A big history in this camp. A lot of miners have gone through here. This was one of the places where JP Morgan and Newmont started back at the turn of the century. We've gone back in and done what we do, which is to go back and re-drill, reinterpret, and bring together large-scale mining techniques to old mining camps. Currently, the resource stands at about 2 million ounces in total reserves that are in the mine plan. So 2,031,000 ounces in the mine plan. We have an additional 1.57 million ounces in measured and indicated, and another 1.712 million ounces in the inferred category. So there's another 3 million ounces outside of the current mine plan that are, for the most part, only not in the mine plan due to a lack of drill density. So those ounces are very real, and they're a big catalyst for what shareholders can expect to see over the next 24 to 36 months as the underground development gets underway. The project has evolved quite quickly. As you can see in the brown or the gold color, it's where we are today. We received the EA certificate back in fall of 2023, and then we got the mine and final permits in November of 2024. So relatively fresh presence. And then we're looking at the application as we go forward and to execute that project. And we received our environmental projects both water management and water release at the end of the year. So we are fully permitted to construct a 5,000 ton a day mine, which would make us a 200,000 ounce year producer in about 24 months from the final investment decision. This resource that you see in the pink and the purple is a mine development along about a 4.2 kilometer strike length. There's 2 million ounces in the mine plan. And like I said, there's another 3 million ounces that are around the mine plan, but don't have enough underground drilling completed as of yet to be included in the mine plan. But they are within the infrastructure footprint that we're capitalizing with the first 2 million ounces. So we've drilled about 1,172 meters, 1,172 meters has been successfully completed in underground development. You can see a large scale capable of taking 50-ton trucks, 5 meter by 5 meter ramp access. You can see the mineralization in the rock in the second photo over, where we see these vein corridors that are multiple veins with a high level of pyrite and gold in them. After 8,000 intercepts of these vein systems, the average grade in those quartz veins and sulfide zones is about 11 grams. So we've drilled over 700,000 meters of a drilling into this project to get us to where we are in the resource. We have a 2 million ounces at 3.78 grams, which, to put that in context, 3.78 grams right now, gold is worth roughly $90 a gram. So this is about $350 a ton of rock, and it costs us about $120 a ton to mine it. So very, very good economics on this project. We have a 12-year mine life. First production, we're scheduled for 2028 in phase 2025 in phase one, which was sort of a smaller startup based on development work, and then full phase in 2028 to go to 5,000 tons a day. Initial capex of $137 million with a second step to the 5,000 tons a day. Gold recovery of about 1.87 million ounces out of the 2 million ounces of resource, and gold production averaging 164,000 ounces a year. With all-in sustaining costs and the feasibility of 2023 feasibility of $968 an ounce, definitely a tier one cost structure. What we're looking at here on the left is a plan view of the deposit. What you see in the pink is the planned mine reserve, and what you see in the blue is the opportunity of the ounces that are in the measured and indicated and inferred category. And often you see that we would have to mine through the blue zones to get to the pink zone. So obviously we'll do the detailed drilling as we get in there to make sure that we convert those ounces, and that should enhance significantly, especially the early stage, the first 3 years of mining, to be able to use the amount of development meters that we have to put into this mine to access this ore body to hopefully increase significantly the amount of ounces per meter of development that we put in to the first phase of the mine plan. So it's a huge opportunity to increase the amount. This slide is one of the more interesting ones that shows our 4.4 kilometers of strike length in the left on the Caribou Gold deposit. And we're averaging about 1.2 million ounces for every kilometer of strike length in this. And the overall depth, we've only drilled down to a depth of 350 meters on average for the resource. We have drilled down and tested the deposit down to 1,000 meters. We see no difference between what we see in the first 350 as to what we see in the other 600 meters below us. Right now, we're averaging about 1.5 million ounces for each 100 meters that we've done detailed drillings on. So that's about 15,000 ounces per vertical meter, which is one of the higher ounces per vertical meter of all the underground mines that are out there at this point in time. We've compared it to Young-Davidson, where they're at 2.2 grams a ton. We're at 3.78. So we're about 60% higher grade than they are at present. And our footprint is about, our strike length of the deposit is about 4 times the length of the Young-Davidson deposit. They're producing at about $1,200 an ounce out of 185,000 ounces a year with a much lower grade than what we have. Goldex is another mine operated by Agnico in Quebec. 140,000 ounces a year at $1,000 an ounce of all-in sustaining costs, but less than half the grade of what we are, with a strike length again of under a kilometer. We have 4.4 kilometers of strike length. The third mine that we show here is LaRonde, which has kind of been the cornerstone asset for Agnico as they evolved. Before they got Canadian Malartic and Detour, this was their biggest mine. 300,000 ounces a year, averaging 3.83 grams a ton, so roughly the same grade as we are. And that was the cornerstone asset that Agnico was built from. So we have a very similar profile, but we have a much longer strike length and a significantly more upside at depth. So this is a very important asset in terms of what we believe is the cornerstone to the next chapter of the Osisko story. We've built $13 billion worth of companies under the Osisko brand. And this is the next big one that I'm focused on for the next 5 to 6 years as we continue to build this project. All-in sustaining costs here of $886 an ounce for this project, and a significant potential at depth. So the next 2 or 3 mines we believe are going to be right below the first one. If we were to look at this thing as as 3 layers of with 3 different mines at different level, each one of them being about 350 meters in height, we would be able to take this down to 1,500 meters. We're only showing it down to 1,000, but all the upside is right below us. We have drill tested that at depth structure, but we don't have enough drill meters there to qualify a resource as of yet. And we plan to do that work from the underground where it's more efficient and lower cost. So what we see in this slide is, so that was the Caribou Gold Project in British Columbia. What we see in this slide is our project in Utah, located 40 miles south of Bingham, the largest copper gold mine in the US, having produced over 25 million ounces of gold and 25 million tons of copper. Bingham remains one of the largest copper gold assets in the world. We are exactly in the same age rocks as Bingham, and we are drilling for what we think could be a Bingham style porphyry copper system. However, this project has already got some stuff going on. There are 23 historic producing mines on this property. It is located outside of Provo, Utah, about 40 miles south of Bingham, as we say, which is in Salt Lake City. You can see we're looking down the valley at the mine site for the Bergen. This was a historic mine site with 23 previous producers, 5 of which were gold mines, and 18 of which were CRD mines, carbonate replacement deposits, or gold, silver, lead, zinc mines that were in production under the Kennecott and Rio Tinto banner. Historically, the site was mined for quartz to go as flux to the Bingham site, with the 5 gold mines providing that. The highest grade gold mine here is called North Lily, and it produced at 45 grams, or just about 1.5 ounces a ton historically. So there's a high grade gold system as well as the CRD and the components, and this is what we believe to be a porphyry camp with all the end members that you would have seen at Bingham if you'd have been there when the mine was discovered. But this is still intact because the actual porphyry mineralization is probably at between 1,500 meters at depth. And we see all the end members of the porphyry system here with the historic resource being there as well. What we see also, we have good neighbors. Ivanhoe Electric, Robert Friedland's company, is to our southwest, and Freeport McMoran to our south. So this is downtown. This is one of the more historic sites that I've been on. Started mining in 1850, and a significant amount of historic production here. You see the 2 pink zones here. These are what they call lithocaps, and they express a very hot source of rock having been underneath because they've cooked up all the rock that's on top of them. We're drilling in the Big Hill porphyry lithocap as we speak towards Trixie. And this is where we're going to focus our interim is. This camp has historic production of almost 3 million ounces of gold, 285 million ounces of silver, 128,000 tons of copper, and 1.6 million tons of lead. and 256 tons of zinc. So pretty much all the metals are represented in this camp. That's why Ivanhoe is here, and that is why Freeport is here. And we are looking at these copper gold molybdenum opportunities that we see here. So this is pretty significant mining camp, and more to come on that. We do have a high grade resource that's there. But I think for investors today, the most important aspect of what we're going to talk about is the value chain. And as we see here, this is a pretty good grouping of companies. As we saw, if you look at G Mining, they were where we are in September of 2022. They're now at 4.3 billion. And we're significantly higher resource size than they are at this point in time. We are also on our way with the first mine production scheduled to be roughly 200,000 ounces a year. We would be a competitor to Wesdome, which currently has a $2.4 billion market cap. The other comparable would be the step forward on the Artemis Blackwater project. They started out at roughly $858 million market cap back in 2023, currently trading at $3.5 billion market cap. So you can see the delta that we're proposing here in terms of evolution. And if we look up the value chain here, we see our friends at Alamos are now a $15 billion company, and they produced about 497,000 ounces last year. We think that this project ultimately, the 200,000 ounces a year that we put the feasibility study on, is a starter project, and that we have a phase 2, 3, and 4 in this mining camp called Caribou that will allow us to get there, and hopefully with the addition of some production coming online from Utah, we would be marching up this field towards that ultimate valuation. Basic shares outstanding at this point in time at about 136 million, trading at about $1.90 for a total enterprise value of about $270 million, trading at 0.2 with significant re-rate capacity as we get risk off on the rest of this. The shareholder base, we have 24% is owned by our sister company, Osisko Gold Royalties. Insiders own a significant amount, as well as we have some very significant institutional shareholders with Condire, Franklin Templeton, Fidelity, CQS, Invesco, and Sprott, traditional shareholders to us who have been with us on many other companies. As I said, we've built $13 billion worth of companies. Current analysts, National Bank, Canada Fitzgerald, RBC, and then Ventum, BMO, and Hannam Partners. And again, we're trading at a relative valuation of 0.2. So a lot of room to go, and we're right at the starting gate for the re-rate process as we get into the mine construction. So on that note, we think that is the opportunity here. This is a Canadian and a U.S. story, and certainly a project for the times.
Thank you, Sean. And let me turn on my camera here first. And there's a few questions on the audience. I'd like to address those to you. The first one, a couple of persons actually asking similar thing. Do you expect the bulk samples and initial feasibility results out soon, and with the final report in Q2?
Yes, we're working on the bulk sample right now. We've taken one of 2 or 3 different zones that we're working on right now. So there's continuous work. We're waiting for analysis and final reconciliation from that work. Should be out within the next 3 to 5 weeks or so. In terms of the updated feasibility study, we're working on that as president. We expect that to be out in Q2.
This question from Peter is asking, you have some issues with one Indigenous community around the permit approval before. Has that been resolved?
So we received our full permit after the full consultation process was completed. We had 3 groups in the consultation process. We've achieved IBAs with 2 of them. We're still ongoing negotiations with the 3rd group, and that process is active, and we meet with them quite regularly, bi-monthly. So we continue to work on that, and and they're in a discussion not only with us but with other industries within the area as well as the government of BC. But we have received all of our authorized permits, and the duty to consult was completed prior to the government issuing the permit. So what's outstanding right now is the questions around that duty to consult. But we have the permit now, and the only way forward really would be to go back and review that. But we think that we'll finish the negotiations to success here, hopefully in the near to midterm.
This question from Jack: has the phased scaled mining approach been revised in the FS to defer the production for larger initial production? Because he believes that it was mentioned in the previous presentation before.
We've looked at that, and we're continuing to refine that. We'll put that in the updated feasibility study. Right now, the simpler the better, and we're working with our project finance group to finalize which strategy will be adapted. But for now, we've maintained with our 2023 feasibility study, which is the most up-to-date feasibility study that we have published.
Great. And question and asking, how much are you looking to finance for the mine build, and what you have been doing with the funds used for the last financing?
So we had about $720 million accumulated in the first CapEx numbers. So we're finalizing the revised CapEx in this updated feasibility study. The money that we had raised in 2024 has been used to do the underground development. We've done about 1,200 meters of underground development there to complete updated met work and feasibility work to do the updated feasibility publishing, as well as the evolution of early construction items such as water treatment and other infrastructure items that are conditional permit requirements before we initiate the final mine development. We've also spent some money on the development at Tintic in Utah to access the ore body, and also to carry on some of the copper gold porphyry deeper drilling targets that we have on the go there. We have one hole underway as we speak, which will be the third hole in that program. So that's where we are, and we still maintain a very healthy balance sheet, having closed the year out with over 100 million Canadian on the balance sheet.
Great, Sean. Thank you for being here to answer all the questions and sharing your story with us here.
Good luck to everybody, and please give us a call if there's any further detail. This should be a very exciting year for Team ODV.
Great, indeed. So let's continue to follow the story of development of ODV for sure.